Welcome to today's market report. European stock markets traded higher on Friday, helped by strong earnings from German auto giant Daimler, as well as rising sentiment over a global economic recovery. DAX in Germany traded 0.5% higher, climbing to the record high. CAC 40 in France rose 0.2%. FTSE 100 gained 0.5%, climbing to a new 52-week high, while the blue chip Euro Stoxx 50 rose 0.3% to an all-time high. Stock markets around the globe, with Europe being no exception, have climbed to record levels of late on expectations that the global vaccination program, coupled with hefty stimulus packages, especially in the US, will unleash pent-up demand. Evidence of this emerged in the US on Thursday as retail sales surged 9.8% in March, easily outstripping consensus expectations. This was backed up earlier on Friday as China's economy posted growth of over 18% on the year, although the quarterly growth dynamic slowed modestly. Adding to the enthusiasm, Friday has been strong corporate news in Europe, led by the auto sector. Daimler stock gained 2.1% as the German car maker and truck maker reported higher vehicle prices and solid demand in China, helped by a strong performance from its Mercedes Benz cars, resulting in a surge in quarterly operating profit. European car registrations jumped in March, rising over 63% year-on-year, industry data showed on Friday, as the sector recovered from the damage a year ago when coronavirus lockdowns devastated sales. EU sales, which exclude the UK, rose an even stronger 87%. Elsewhere, HelloFresh stock rose 4.8% after the meal kit delivery company announced a strong first quarter preliminary results and lifted its 2021 outlook as consumers cooked more at home during the pandemic. On the flip side, L'Oreal stock fell 1.6% despite the French cosmetics group posting a further pickup in sales in the first quarter. The luxury sector has posted strong gains of late, amid expectations that customers will return with a bang as the global economy reopens. On the economic data slate, final euro area inflation figures for March are due later in this session, but are unlikely to have an immediate impact on the thinking at the European Central Bank, given their current subdued level. Oil prices climbed to one-month highs on Friday, helped by an improved oil demand outlook on the back of strong economic recoveries in China and the States. US crude futures traded 0.4% higher at $63.70 per barrel. Brent rose 0.4% to $67.22 per barrel. Both contracts on course for around 7% gains this week. Gold futures fell 0.3% to $1,762.45 per ounce. On the FX front, GBP/USD risk looks to be already shifting lower again, and below 137.50 would warn of a retest of key support from the March low at 136.70. The pair attracted some dip buying on the last trading day of the week and quickly recovered its early loss around 137.15 region. The US dollar struggled to preserve its modest intraday gains, instead witnessed a modest pullback from higher levels. This, in turn, was seen as a key factor that assisted the GBP/USD pair to regain tractions. Despite the incoming strong US economic data, investors now seem convinced that the Fed will keep interest rates near zero level for a longer period. Fading expectations for an early Fed lift-off capped any meaningful upside for the greenback, which so far has failed to find any support from a strong pickup in the US Treasury bond yields. Apart from this, the underlying bullish sentiment in the financial markets, as depicted by a relentless rally in equity markets, further undermined the safe haven US dollar. The GBP/USD pair has now moved back closer to the 138 mark, though worries about AstraZeneca coronavirus vaccine might keep a lid on any meaningful upside. Market participants now look forward to the US data, the releases of housing starts, building permits, and the prelim Michigan Consumer Sentiment Index. This, along with the US bond yields and the broader market risk sentiment, will influence the US dollar price dynamics and allow traders to grab some short-term opportunities around the GBP-USD pair. Euro-dollar reverses Thursday's pullback and once again sets sails to the key barrier at 120, the figure. The recovery from a year-to-date low near 117 remains well and sound so far, helped at the same time by the recent break above the 200-day SMA, 119.02. The dollar index was at 91.654. This is today's market news. Thanks for listening. We'll see you next time.